Well, actually, I think big tech is fine. Outside of the regulatory risk, these businesses are doing very, very well, and I don't think that valuation is really a concern for those companies, at least relative to their growth prospects.
John, how big an impact might these foreign taxes or foreign regulation have? The France example, of course, the latest and the one at the forefront.
Right. I think this one was kind of I don't know, really sort of unnecessarily arbitrary and very sort of obviously targeted at tech. And I think they're taking advantage of the fact that Facebook and Google in particular are really in the crosshairs here in the States. So they almost as if they think they can get away with it. It's not that big a deal right now, but I think it's emblematic of what could be a problematic trend. But I'm not calling that right now. I think it's not even signed yet, and there's room for, there's room for flexibility and so forth, I think, in negotiation.
When you say reasonable valuations, John, what part of technology specifically are you looking at? Because Goldman Sachs recently just sounded the alarm on software stocks for high valuations. They've been obviously darlings of this market. So when you say reasonable, what do you mean?
Okay, so like I said, relative to growth, but and I would take issue with their call on software stocks, particularly software as a service stocks or cloud stocks. A lot of them, there may be a couple that are overvalued, and I think they stand out, but I think what's underappreciated here is the tremendous amount of operating leverage that these businesses have inherently. When they want to start turning a profit, they can. And so I think that skews the valuation argument a little bit because people are looking at projected earnings, which I think are, of a long term might be, underrepresenting what they can really do when they start to mature 5 years down the road.
Stephanie, is regulatory and political risk priced in to these stocks?
I don't really know, actually. I mean, maybe not, but I think that regulation is going to take a long time to filter through and to see the results. Look, I think in terms of technology in general, there are the haves and the have-nots, and software, you guys just talked about it. And I understand why you want to own some software as a service, but they do trade at 30 to 50 times forward earnings. They do have operating leverage, and they do have recurring revenue. That's why they trade where they do. Expectations are high, and it's a very crowded space. The better value would be in the semiconductor space, and even the FANG, because they have been dragged down on regulation. But in terms of semis, you really do need some of the end markets to stabilize. But I think your risk reward on semis and semi-cap equipment is far better than software.
I wonder if there's a way to play this high growth trend, high margins, secular growth, strong stories, without getting caught up in trade, semis, or political risk, some of the social media stocks.
You can do security. I mean, because everyone needs security. The problem is they're also very expensive, and they've also done quite well. And look at Fortinet, I mean, look at FireEye, look at Palo Alto. They've all had really great runs this year, and they're not cheap.